Hey everyone, welcome back to Corporate Decoder, the place where we sift through corporate filings so you don't have to. Today we're diving into the VanEck Merk Gold ETF's annual report, so get ready to unearth some golden nuggets, though maybe not the kind you can melt down and wear as jewelry. This report gives us a look at how this gold-backed investment fund performed over the past year. Think of it as a treasure map, but instead of X marking the spot, it's numbers and disclosures revealing if this ETF is worth its weight in gold. The report covers the fiscal year that ended in January of 2025. This is like checking in to see how accurate the fund is to its goal and what it costs to invest in it. This ETF aims to provide investors easy access to gold, a popular store of value. It's supposed to be a cost-effective way to invest in gold without having to buy physical bars. Now, before we get into the nitty-gritty financials, let's talk about the gold industry itself. Gold has two main uses: as a shiny material for jewelry and electronics, and as a safe place to park money, a store of value. It's pretty indestructible and not linked to any specific government, which makes it attractive when people are nervous about the economy. Jewelry is a big driver for gold demand, but so is investment. The amount of gold used in jewelry fell during some years, reflecting economic downturns. People tend to hold onto their gold when times are tough. Where does all this gold come from? Mining is the biggest source, with countries like China, Australia, and Russia leading the way. Recycling old gold jewelry and electronics is also surprisingly important. Some central banks sell or buy gold too, but they are net buyers of gold currently. The global gold trade happens in a few ways. The biggest is the over-the-counter or OTC market, where deals are made directly between buyers and sellers. Futures exchanges like COMEX in New York also let people bet on the future price of gold. There are a few ways to hold it. Allocated gold means you own specific bars stored in a vault. Unallocated gold is more like a claim on a pool of gold held by a financial institution. The trust uses allocated gold to back its shares. It also includes volatility in the price of gold in recent years. Gold tends to be less bouncy than other commodities like silver. Now let's talk about how this ETF makes money and what it costs. The trust's main expense is a fee it pays to the sponsor, which is 0.25% of the fund's net value. The sponsor uses this fee to cover many of the trust's costs. The ETF creates and redeems shares only through certain big players known as authorized participants. These aren't your everyday investors. Now, if you're an investor and you want to exchange your shares for physical gold, you submit a delivery application, and the sponsor takes care of these over-the-counter transactions. When an authorized participant wants to create new shares, they deposit gold into the trust's allocated account, not the unallocated account can hold, keeping almost all gold allocated. The trustee can reject an order to deposit gold at any time if it thinks it's necessary, but they better have a good reason. Similarly, the trustee can also halt share redemptions, but they better not overdo it. Merk Investments LLC is the sponsor and makes the ETF tick, and VanEck Securities Corporation helps market the shares. The Bank of New York Mellon is the trustee overseeing the day-to-day operations. JP Chase Bank is the custodian that actually stores all that gold. The trustee isn't just taking the custodian's word for it. They get regular reports and can even visit the vault. It also employs inspectors to audit the gold. This can be changed only with 75% ownership vote. This indicates they did not need to analyze compensation from executives based on previous error corrections. This ensures all required digital financial data has been submitted to the SEC. This shows that the non-affiliated shares had a market value of just over $1 billion, and there were 50 million shares outstanding on March 26 of 2025. The trust's net asset value, or NAV, is the total value of its gold minus any expenses. To value the gold, they switched to using the selective index, which calculates a price based on actual trades near the New York Stock Exchange closing time. If that price isn't available, they can use a different one. That sponsor fee is paid not in cash, but in shares of the fund. Okay, let's scroll down to the fun part, the financials. The amount of gold in the trust increased from 383 fifyol and 204 fine ounces to foreign value significantly rose from 780 million to over $1.3 billion. The sponsor's fee was $2.57 million. Outstanding shares increased significantly. There's a reminder that high-income individuals might get hit with an additional investment income tax. For those investing for retirement accounts, there are a few things to keep in mind regarding prohibited transactions. If central banks decide to dump their gold reserves on the market, this ETF could take a hit. If authorized participants withdraw, liquidity may decline, hurting the stock. During times of crisis such as financial meltdowns, they mention the 2008 situation. They talk about how a hedge on gold producers may decline its price, affecting this ETF. As the trust issues more shares for its fee, the existing shares could become worth less if the price of gold doesn't keep up. If the trust suspends the surrender of shares, you might have to sell it on the open market instead, costing you more. The creation and redemption of the shares of the ETF might encounter unanticipated difficulties. The ETF has no liability on losses with respect to the delivery of physical gold. The risk of default of a precious metals dealer is also touched upon. A failure by precious metals dealer in delivering the gold could result in losses to the trust. This states that physical gold needs to be reassayed, resulting in more costs and delays. There are many risks to this ETF, as detailed in the cybersecurity procedures touched on. This is just a statement that there are no mine safety disclosures. It also states that the effectiveness of its internal control was solid. Trying to sue a custodian outside the US might prove tricky. But there's no specific governmental body that is actively supervising the custodian's gold storage operations. Finally, there are risks if the third parties don't have enough insurance. Public health crises might impact the service providers that are running the trust. The conflicts in the Middle East and the war in Ukraine could disrupt global markets and affect this ETF. There are cybersecurity issues with maintaining this type of data tacted. So what's the verdict on this VanEck Merk Gold ETF and after reviewing this report? It's a pretty straightforward way to invest in gold, but it's not without risks. The price of gold can be volatile and the ETF's value will follow suit. The fund has value of a little over 1.3 billion as of January 31, 20 billion as of January 31, 2025. While the ETF increased in net value, the fees that the sponsor charged still came out to $2.57 million. It's also important to remember that there are 50 million plus shares available. Basically, it's a simple way to invest in gold and potentially beat inflation, but it also has some inherent risks. Make sure you know the risks. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, hit that like button, leave a comment, and subscribe for more financial deep dives. Until next time.